I make money on success and I make money on failure. I graduated from college. I graduated from college and I started working in a garment company in the accounting department, and I hated my life, brother. I gotta tell you this, right? The way that a bank thinks and the way that the consumer thinks is very different.
Hi, everyone. This is Jack Alwell with another Money episode. Today, we have very special guest, Robert Ferra, investor, lender. Robert, welcome to the show.
Thank you, Jack. Thank you for having me.
Before we get into your investing endeavors, I do like to ask everyone to start out, what was your relationship like with money growing up?
Not at all. Not at all. No, I was born in the third world country. I was born in South America. I came to America in 1880, and my parents worked in a factory. Different factories, but they not at all. And to pay my way through college, one of the things that I did was I got my real estate license, which after college I let expire. I didn't continue using it. And we bought some properties with my parents, but it was all me,
Hmm.
So in '85, I naturalized American, but my parents were not financially educated one bit. Um, they, like I said, they came here, they worked in a factory, and you know, they retired pretty well because I forced them to buy some real estate. So we lived in Perth Amboy, New Jersey for uh, well, they lived there for like I don't know, like 40 years or so, and then they went back to Uruguay. They retired back in Uruguay, but they had like about 3 or 4 houses before they did that.
Hmm. Where
But
and the houses were in Jersey?
all in Perth
Just
Amboy, Perth Amboy, New
okay.
Jersey.
Okay.
Yeah.
I mean, how did you what got you to want to look into like real estate and investing?
Well, what happened was that I graduated from college. Graduated from college and I started working in a garment company in the accounting department,
Okay.
and I hated my life, brother. Everything,
Okay.
it's like I cannot be do this for the next 40 years, right? So I answered an ad that said, "We need loan officers." Right? It was a company in South Jersey. I used to live in North Jersey, but it was a company in South Jersey. We need loan officers, no experience, willing to train. I'm like, all right, no experience, perfect. That's the one thing I know that I fit. I did not know anything about lending. So I learned to lend. I worked for many broker companies. I was once the manager for Countrywide Home Loans and so on and so forth, right? Um, and through lending is where I started understanding math and risk and behavior and things of that nature. And from that, I started saying, "Oh, you know what? What am I doing?" One year I closed 885 loans, so I made a lot of money, right? I was
Mhm.
recognized by a magazine called Mortgage Originator Magazine. So, what do you do with that money? You put it in the bank and do what with it, right? So I bought some properties, sold some properties. Also, I had many friends in the industry that they said, "Hey, Robert, can you help us with the money? We'll do all the work, and we flip some properties." So little by little, that's how I learned it.
Mhm. In terms of the lending, I mean, you touched on the underwriting, you started learning the math, but more, you also were learning the psychology. Can you talk about some of the psychology of borrowers and then just, yeah, psychology in the lending process?
Well, I gotta tell you this, right? The way that a bank thinks and the way that the consumer thinks is very different, right? So as a consumer, you say, "Well, if I don't pay, you just go take my house." Well, the bank does not want your house. What the bank wants is that payment because they go and they
Mhm.
pledge the money, they make the money work, and they keep lending and so on and so forth, right? So I learned how to lend. I learned how to invest, thinking more like a bank, right? And when it comes to how does a bank think? Well, the bank looks for behavior and they look for math. So there's something called the 5 C's of lending. I don't know if you ever heard of that.
Interesting. Yeah.
Yeah, 5 C's is capacity, which is your ability to generate income. Capital, which is your ability to accumulate savings. Credit is how well you meet your responsibilities. Collateral, it's what's at risk, right? And conditions, what's going to be the best and highest use of that money. So when the bank says, okay, I'm going to lend you money, based on your ability to do all of these things, right? And you may be, one of those 5 C's could be stronger than the other. And that is where your interest adjusts to what kind of risk you represent, right? Now, the customer says, okay, I would like to borrow money the way that my cousin did. Well, your cousin had a different credit history, and your cousin had a different job. He was probably self-employed, and you're probably on a salary. So you can't borrow, one simple way. It's not one size fits all, right? So rates and terms and stipulations and cost and all of that is attached to exactly how you behave. All right. I understand that. So when I invest, I look a lot into math. I make sure that things that I'm very secure that even when I fail, I still make money. Because and I try to imitate lending and try to imitate banks and brokers, right? When I invest this way, I make money on success and I make money on failure.
Mm-hmm. Can you talk to some of the ways you protect yourself? Like when you say you make money on failure, can you describe some of the processes or maybe contracts that you have in place that help protect the downside part of the investment?
Okay, so the way that I invest is called I do a lot of what's called promissory notes, right?
Mm-hmm.
I cure loans, right, that of folks that are losing their house, and then I go and attach that loan to a mortgage against that house, and if they don't pay, right, what I do is I go after the house. So now I have my criteria of how much I'm willing to lend and what risk and things of that nature, right? So if they don't pay me, I know there's enough equity there where I'm not only going to cover my money, but I'm going to make a lot more money because of that spread of the value of the house and what I lent.
Mm-hmm. Are there certain states? I think I've read like certain states, it's like easier to foreclose on a house or like take back the collateral. Like, are there certain states that you only lend in?
Well, what I do is this, right?
Uh-huh.
The moment that I lend the money, I also have them execute a warranty deed. Right? Now, I don't record the deed, I just have it.
Ah, okay.
So if they don't pay, let's say, 4 months in a row, then I go and I record it.
Okay. Then it's actually yours and you don't have to
So
do much else.
I don't have to go and foreclose.
Uh-huh. Okay, so it's
So
actually in your name. You have that locked and
correct.
loaded.
At that point in time, it's under my company's name, and then automatically I transfer that to a trust,
Uh-huh.
and I eliminate any kind of risk that I have in case of whatever.
Mm-hmm. Is this exclusively the type of lending you do right now?
No, 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 no. I still do residential lending, right?
Mm-hmm.
I work for a company called Cross Country Mortgage.
Okay.
I also have my own brokerage firm, which is called Latin Loan Capital. And in Latin Loan, I do a lot of, fix and flip lending, construct, ground up, and DSCR and SBA and
Ah.
things of that nature,
Mm-hmm.
In 2019, I closed a $50 million ESBA loan, right?
Okay.
USDA/SBA. I'd also do a lot of personal loans, with no collateral based on, credit and income. So I have like about 250 different lenders.
Mm-hmm.
Uh, occasionally I do business loans for, like MCAs and factoring and purchase order financing, supply chain, equipment. But most right now, when I do that, it's mostly because I know the customer. And
Uh-huh.
my 95% of my focus is on residential lending, commercial lending, and investing.
Okay. The ones that are more like personal loans, how are people finding you? Are they like, do you actually like know them personally, or are they more like friends of friends, or yeah, how are people finding you?
Well, I've been in this game for since 1991.
Uh-huh.
I haven't had a business card for like about 20 years.
Okay, that's good.
So, and I travel all over America, and a lot of folks know me. I started my career in New York and New Jersey, New York, and Pennsylvania. Right. Right now, I have customers all over the country. You know, um, you know, this morning before I got in, from somebody from San Antonio reached out to me that they needed a loan to do a fix and flip in Texas. Right.
Mm-hmm.
Never met him. I don't know who that person is, but
Okay.
somebody gave him my number and that, so on and so forth. And I have a lot of great referrals and, and I do other things. Obviously, I'm a guest at a different podcast like this one.
Mm-hmm.
A lot of people, they want to learn how about, the way I lend or the way I invest. And sometimes I travel. I've been in doing education in Denver, Colorado, and Raleigh, North Carolina, and
Okay.
Alexandria. So I'll travel to different places. And now, in about 10 days from now, I'm going to go visit some friends in Chicago. We're going to do like a quick presentation to a group to a church that they want to learn how, things like
Okay.
that. So,
Cool. So I've compiled a couple questions I got from people. When you're lending, if there's not collateral, I mean, I guess there could be collateral involved too, but are you getting them to like take out life insurance? Like, what happens if they die while you've lent them money? Like, can you walk us through like that
it,
scenario?
well, if there's no collateral, right?
Uh-huh.
Uh, what I do, I broker loans to different banks.
Okay.
So I don't do that,
Okay.
right? And in this type of loans is typically, let's just say, 3 years, 5 years, 7 years, that amortize just like like a normal car payment kind of loan, right?
Mm-hmm.
Things of that nature. And when we lend money, I need to really understand what is that money going to do for them.
Mm-hmm.
All right. So I need money to do to put as a down payment for a um, fix and flip, right?
Mm-hmm.
Or I bought a house, I bought it cash, I ran out of money, I need a little more, some more improvements. So for finishing the product, right?
Mm-hmm.
Or they're going to start a new business. I don't qualify through the SBA, but I've been a barber for like 20 years. I want to open up my own shop and things of that nature. So those are the main reasons why you do personal loans, right?
Mm-hmm.
So I broker that. I don't do it with my own money.
Well, one thing that's picking up speed is borrowing from like Bitcoin. Like, I take it you have not gotten involved in that realm yet. No one's come to you saying, "Oh, I
No,
got my Bitcoin I can post for collateral." Okay. Just, yeah,
no,
just
no,
curious if people have started approaching you. It
no, no,
seems to
no.
be picking up.
I so
Um,
so the lenders that I have, right?
mhm,
It's that they have very specific guidelines, right?
mhm,
And if let's just say a lender calls me today and says, "Hey, Robert, you know what? Now I'm going to use Bitcoin as collateral."
mhm.
I'm not even going to promote it. If it comes, then I'll present it,
I
right?
see.
But I'm I understand real estate very very well. I
Mhm.
understand, so I'd rather stay in what I
Yep.
understand more so than anything else.
Mhm. Do you have like a typical minimum amount you would want to, or like your lenders lend at? Like, what's the minimum amount they would want to lend?
All right, so okay, let's just say I'm going to lend for me to invest.
Hmm.
Okay. All right. So right now in America, there's about 30,000 people that every month are losing their houses.
Wow.
Right.
Okay.
It's and you can look it up. There's a website called ATTOM, right? And it's all
Okay.
about data, right? So they can check it out. So what I do is I target different areas. I like the Carolinas, I like Texas, I like Colorado, I like certain parts of Florida, certain parts of Jersey, certain parts of Pennsylvania, right? The Midwest. And so what we do is we market to them, right? We send letters and say, hey, listen, you know what? I know you're in trouble. Give us a call, see if we can help you out. And the way that we lend is called curing, to cure a loan, right? So let's just say the house is worth $200,000, but they owe 100 and they're losing the house. But in order to bring that house current, all that they need is, $10,000, because they're back on interest and interest payments and taxes and things like that. So what I do is I lend them that money. I lend them the $10,000, right? I create a little bit of a spread, because I had to pay, the closing costs is on me. They don't have money, right? The closing costs is on me. The title search and all of that is on me, right? So now I said, okay, we're going to lend you, $15,000. $10,000 is going to go to the bank, right? And I'm going to pay everything else, and you're going to sign a notary promissory note. The notary is going to go and with a mortgage of deed of trust, and we're going to record that, right? So a lot of these times, what I sell these investments to folks that just say, hey, you know what? I don't want to go. I don't want to deal with tenants. I don't want to deal with anything. I just want to, lend money. And so part of that spread helps me also to make money when I sell the loans, right? So we noticed that the majority of the investors that buy these loans are in between 25,000 to 80,000.
Okay.
So we stayed in there. If it is, let's just say, I have folks that are losing the houses for like $5,000, houses that probably like totally paid in full, right?
Okay.
Yeah, it's like, so at that time, I lend them the $5,000. I do the same thing. I put a promissory note and I keep that. I don't just sell that because it's too small to sell, right? And you cannot put too much of a margin because it just doesn't make sense. The ratios are like, so I just keep that, and they just pay me. And typically we do it for like 1 year, 2 years, or 3 years, interest only. We do the balloons, so at the end they have to pay. And because I have the ability to do residential lending, 6 months on the road, we go and we talk to the homeowner and say, listen, let's just see if we can get you strong again. Let's just see if we can refinance your problem. If you're not ready, then we're looking to a year from now, and we try to help them out. And if not, we keep going until they're ready.
Okay, so you're kind of like the exit plan is typically to help them refinance to get your cash back. That's typically how they're paying you. They're like refinancing, and that's typically how they're repaying
Right.
you.
More often than not, that is the way that's the exit, right? Sometimes the sell, right? Uh, not too long ago, they had somebody in Arizona that had 2 investment properties. They're losing both investment properties, right? And because they just couldn't finish the work, they ran out of money. They couldn't finish the work, right? The exit strategy was to sell. So said, all right, let's just buy you the time. Let's just give you the money, buy you the time, right?
Yep.
And then you're gonna sell your property, and now that he makes the money. Now, if he doesn't pay me, guess what? Now it's my property, and he worked on it, and he improved my collateral.
Yep.
Right. So,
Cool.
and typically the cost of the money is about 18% annually, right?
Okay.
So if somebody says, hey, you know what, I want to buy an investment. I don't want to deal with tenants. I don't want to deal with vacancies. I don't want to deal with fixing toilets. I don't want to deal with, the cash on cash changing because the net income after finance is like different. Like in Florida, for argument's sake, insurance went up a lot. So that affects your math, right?
Yep.
In certain states, taxes go up, and that affects your net income after finance and your cash on cash, and it affects all your math. So somebody says, I just want to get a number that I'm comfortable, investing in, and I don't want to deal with anything. So we go and we sell these notes to them, because if you lend money, right? Let's just say Bank of America lends you money. That's Bank of America care if if you had to go and change the gutters, or you had to go change a light bulb, or you had to change a toilet, or even if you want to paint your house like crazy colors. Bank of America does not care of any of that, right? Or any bank for that matter. All that they want is for you to make that payment,
Yep.
right? So if somebody wants to invest and says, all I want is to make a payment and not worry, right? Now, what if they don't pay? Like I said, at that point, I take ownership, right, of the property, and then I'll go and I'll pay the investor whatever the previous homeowner didn't. So my investors are always, they will always make the money that they wanted to make.
Yep.
Right. And
Okay.
then I go like, I picked up a property. I picked up a property in Central Florida, Claremont. It cost me to bring it whole, right? It cost me $2,500. The property is worth like $530,000. It has
Okay.
like about $280,000. Now every month, I'm paying the investor, right? It's costing me like about $700, right? 6 months on the road, I'm going to refinance the property. I'm gonna pay the investor in full, and I'm gonna get a lot of that equity back into my bank account, to keep that liquidity going, right?
Yep.
I can sell the house, but this house, we like it. It's a very nice house. It's a very nice location. It's like 20 something minutes away from Disney World, Orlando and all of that, right? So we're gonna keep that property. Now, my investor is super happy. My investor doesn't even live in America. He lives in South America. He lives in Argentina. He doesn't want to
Okay.
go and deal with all the the legal costs,
Yeah.
and he's not gonna go and come to the to a court and fight the cut, not gonna do any of that, right? But I'm willing to do that, because and we set it up that way. So my investors, all that they have to do is collect, is say, I have the money, I want to put the money away into a good investment vehicle, right? Invest in a good investment, and I don't want to deal with anything else. So that's what we do. We do all of that. And guess what? I get about like 50 to 60 requests every month.
Wow.
Yeah, because we send like about 2,000 to 3,000 letters every month, right?
Okay.
So you don't get it's like about 15 to 20% is what you get back in response, right? But out of that, we probably close like 12 to 12, 15 to 20 deals a month.
Cool.
Yeah.
That's much better than my response rates. I do mailers for raw land, and I get maybe 1% response rates.
I think that's
But
very tough.
yeah, it is. It is tough.
Yeah.
You spoke to the 18%. Have you run into any issues? Because, and I didn't look into this too much, but I have some rentals in Michigan, and I looked to possibly seller finance them to the current tenants. And I had some people told me the most I could charge in interest was legally 12%. Have you run into anything with, I think, like usury laws or the interest rate?
No. We have a lot of legal representation. We're using, everything that I put together. It's not my own creation. We have a legal team, and they review everything, and as things change, guidelines and laws and whatever the case is, and there's certain states that you have to do certain things, and other states that you can't, right? Like penalties, prepayment penalties and things of the nature, and late fees, right? Certain, we have all of that. We know, so now 18 is the pass fail, pretty much for like 80% of the country right now. So and we land where we know that we fit well.
Just curious, like as you've been working with more people in South America, they're probably perfectly happy to be paid in dollars, but do they talk about like the foreign exchange rates fluctuating a lot, anything like that? Or do they just
Well,
keep the dollars like in America?
I have folks also in Europe, like Ireland, they want to invest in here, Canada,
Okay.
right? We have folks in a lot of places that want to invest in here. Like my wife is Filipino. We have some Filipinos that also want to invest in here. And it's not so much that, is that America is very stable when it
Hmm.
comes to banking,
Hmm.
right?
Okay.
Um, and I'm sure you heard that in many countries, um, a bank can close and there's nothing behind that, and you lose all your savings.
Yeah.
All right. In America, there's dollar amounts that that you're protected to and things like that, right? So, but not so much, because they're investing in real estate.
Hmm.
That's another thing that makes them very comfortable.
Hmm.
It's a tangible asset. It's an asset that tradition has always been better and better and better. If it follows inflation, sometimes it goes up, and sometimes and depends on where it is. It may go down or up according to
Hmm.
local economies, right? But traditionally, American real estate has always been, whatever you bought in the 1975 is worth a lot more right now, regardless
Yeah.
how bad things got.
Yeah. Yeah. Well, Robert, as we're winding down, I do like to ask everyone, what is the best and worst personal finance advice you've either heard or received?
Okay. Um. Wow. Uh. I got a lot. I have a great mentor in New York. Is a dear, dear friend of mine, and he gave me a lot of good advice throughout my career. He always gave me good advice. Um, the the best one that I ever heard was, what you promise at the beginning, you have to meet at the end,
Okay.
right? So if you're gonna take a loan, and
Hmm.
this is the way you agreed that you're gonna lend it, right? When they were taking the application, at the closing table, everything has to be the same,
Hmm.
right? Don't bait and switch. Don't say one thing and do something
Okay.
else, right?
Yep.
Um, like, money always comes back to you. You just gotta make sure, that that you do everything right, and then everybody's gonna know about you. This is why I
Hmm.
don't have to have a business card in forever and ever and
Yep.
ever. People hear, oh, you know what? Um, Robert Fair, there were no surprises. When we do a closing, it's like 20 minutes, you're out of there, things like that, right? Um, Worst advice? I don't know. I don't know. I got a
Okay.
lot of pretty. I came across a lot of dumb people in my life too, so I don't know. I
Okay.
apologize
Well,
for that.
Rob,
I don't have a good
it's
one.
a, it's okay. Let's stick with the positive anyway. So,
Yes.
Robert, if the listeners wanted to reach out to you or get in touch, how would they do so, and where can they go to learn about your services?
Okay. The easiest way to contact me, I'd always answer my calls,
Okay.
right? So I always say, like, I'm always busy, therefore I'm always available, right? Call me. If I don't pick up, you're gonna be next on the line, and I call back, right? So my number is 954-614-6316.
Okay.
Hands down, the best way to connect with me. Um, and I'm not at, the social media, Latin Loan, LatinLoanCap.com, and my investment companies are SaveMyNest.com, and that's
Okay.
where they can find us.
Okay. Awesome. Well, I
I'm t-
really,
I'm pretty I have two partners on the investing, and I have one partner on the lending, and they
okay.
are substantially better at social media, right, than I am.
Okay. Well, Robert, I really appreciate the time, and I think you've given the listeners a lot to think about.
Well, thank you, Jack. Thanks for the opportunity, brother.
Yep.